Awesome. Here we go. General principles flashcards. Debt management, housing expenses, pity, total monthly debt, consumer debt. So less than or equal to 28% of gross income is pity. Less than or equal to 36% of gross income is total monthly debt. Less than or equal to 20% of net income is consumer debt, like credit cards. Current ratio, current assets, and current liabilities. Current ratio is current assets divided by current liabilities. Current assets, cash equivalents, marketable securities, accounts receivable, and inventory. That's current assets. Current liabilities is accounts payable, credit card debt, and taxes payable. That's current liabilities. So that's current ratio, current assets, current liabilities. Federal Securities Acts. Securities Act of 1933 required that new issues purchasers be provided with detailed prospectus before a purchase was completed. Securities Act of 1934 passed that the secondary market trading of issued securities, this is also created the SEC to enforce securities laws. Investment Company Act of 1940 authorized the SEC to regulate unit investment trusts, UITs, and manages investment companies' closed-end and open-ended funds, plus variable products. Securities Investors Protection Act of 1970 established the SIPC to supervise securities firms that get into financial difficulties. The SIPC ensures investors against losses arising from failure to a brokerage firm. College funding. Phase-outs, married filing jointly. Educational bonds, $145,000 to $145,200 to $175,200. Lifetime, $160K to $180K. American Opportunity, $160K to $180K. Deductible housing interest. All mortgages cannot exceed $750K combined, married filing and jointly. $375 single, married filing jointly. Married filing single. So $750K jointly, $375 single. Home equity interest is only deductible if used for home renovation and improvement. 529 keys. Lump sum gift up to $90,000. Donor can retain control. K through 12 for tuition allowed up to $10,000 a year. Can be used to pay student loans. $10,000 per student over the lifetime. Federal Reserve open market operations. Repo, the Fed buys securities. Expansionary easy money policy. Reverse repo, federal government sells securities. Contractionary tight money policy. So repo, they repossess the securities, which means that they put more money into the system. If they're selling securities, that means they're taking our money, and they're taking a tight money policy. Contractionary. But that was Federal Reserve open market operations. Gross domestic product, GDP. Total dollar value of all goods and services produced within the U.S. only. GDP counts economic activity without regard to yearly price fluctuations. Does not include any income generated outside the U.S. or adjustments for foreign currencies. Business cycle. You start out with an expansion, then you got a peak, then you go down. That's a recession and contraction. Then at the bottom of that is a trough. Then after a trough, you have recovery and expansion, and then it happens again. Recession versus depression. Recession is 2 consecutive quarters of economic decline, negative GDP. Depression, six consecutive quarters of economic decline, negative GDP. Exceptions to a filing as an investment advisor. Banks that are also investment companies, that are not also investment companies. Lawyers, accountants, teachers, advice is incidental. Broker dealer or registered reps whose performance is incidental and who gets no special compensation for advice. Publishers or bona fide newspapers, those who give advice solely relating to U.S. government securities. Exemptions to filing as an investment advisor. Advisor whose only clients are insurance companies and family offices. How does an investment advisor register with the SEC? Initially, they file the ADV Part 1 and 2 with the SEC. Then they pay a minimum filing fee of $150. The RIA must submit Part 1 of ADV and Schedule 1 annually. Financial Industry Regulation, FINRA. Initial registration process. Individual associates with a broker-dealer, registers with FINRA through a broker-dealer on Form U4, takes and passes the appropriate exam, is issued a CRD number, Central Registration Number. FINRA, Key Examinations and Licenses. The Series 6 allows you to do mutual funds, UITs, and variables. Only new UITs. Series 7, General Securities, UITs on the secondary market. Series 63, Uniform Securities Agent State Law Exam. Series 65, Uniform Investment Advisory Law Exam. Series 66, Uniformed Combined State Law Exam. Combined 63 and 65 exams. Basic components of a legal contract as applied to insurance. Offer and acceptance. Two parties, offer and acceptor. Offerer and acceptor, that's the two parties. Consideration, something of value, money. Legal object, legal in purpose. Competent parties, principal must have legal capacity to execute contracts. Example. Intoxicated adults have limited or no capacity to execute contracts. Minors have capacity to contract for necessities, food, clothing, and shelter only. Legal form, contract must meet requirements. Law of agency, insurance. Express authority, written explicit direction to principal and from principal to agent. Implied authority is that which the public believes the individual holds and includes signage, rate, books, etc. Implied authority is actual authority that the agent must carry out the principal's business. Apparent authority arises out of negligence of the principal in allowing the agent to appear to have authority because of certain actions of the agent in the past. This typically affects terminated agents. Bankruptcy. Debts are not cancelable by bankruptcy. Student loans, government loans, and child support or alimony. Wage withholding, FICA taxes, income tax is due. Rollovers from qualified plans are exempt, unlimited, and non-rollovers, IRAs up to $1 million are exempt. That is bankruptcy. Basic insurance concepts. A condition where there is a possibility of loss. We're on insurance now. A condition where there is a possibility of loss, a situation where an exposure to loss exists. Starting a business or buying real estate. Basic insurance concepts: peril. The cause of possible loss, the event insured against perils like windstorm, fire, and theft. Basic insurance concepts: hazard. A condition that may create or increase the chance of loss arising from a given peril, like owning a home on an earthquake fault line, owning a home by a river. Elements of insurance: large number of homogeneous exposure units, loss must be definite and measurable, must be fortuitous or accidental, must not be catastrophic for insurance company. Methods to avoid / reduce loss. Methods are avoidance, do not drive, do not purchase property, but rent it. Diversification, duplication of assets or activities at different locations. Transference, insurance. Insurance is transferring the risk onto the insurance company. Retention, voluntary recognizes that the risk exists and assumes losses. Deductible coinsurance, risk reduction, sprinkler systems, safety programs. I have to find these other ones. Homeowners' forms of coverage. Here's the chart. Let's see if that'll autofocus. There we go. HO1, HO2, HO3, HO3 is the best. But yeah, A is dwelling, B is structures, C is contents, and D is loss of use. Perils covered broad form. The policy lists the perils covered: basic plus RAF. Rupture of system, artificial generated electricity, falling objects, freezing, and plumbing. Insurance rating service category. AM is the best. A++ to F. Standard and Poor / AAA to CCC. There's that card. AM best. Section of homeowners policy. Section 1 coverages A, B, C, and D. A is dwelling, B is structured, C is contents, D is loss of use. Section 2 coverage E and F. E is liabilities and F is medical payments. Property excluded under personal property coverage: animals, birds or fish, motorized land vehicles and aircraft, property of roomers, boarders, and other tenants, property contained in an apartment regularly rented or held for rental to others by the insured, unless specifically endorsed. Perils, basic form. Policy: wharves, FLT, windstorm, hail, aircraft, riot, vandalism, vehicles, explosion, smoke, fire, lightning, and theft. Calculating life insurance needs: two methods. You got capital utilization approach, uses annuitization to provide needed income but leaves no money at the end of the period. Capital needs approach uses interest only, so the original capital is still left at the end, also called capital retention approach. Defenses: assumption of risk, skiing, stock car races, skydiving, contributory, jaywalking, walking, being drunk. Comparative: A is 20% negligent, B is 80%, Last clear chance. Road rage. You had a shot. You had a window to not get in the crash, but you had road rage and you got in the crash. Negligences. Attractive nuances. Swimming pool. Vacant lot. Negligence per se violates a statute. Strict liability. Product liability. Absolute liability. Workers' comp. Vicarious liability. Principals responsible for their agents. Parts of the insurance contract. You got the declarations paid. It's D dice, declarations paid, definitions, insuring agreements, conditions, and exclusions. Declarations page is the factual statement that identifies the specific person, property that's being insured. Definitions explains the key policy terms. Insuring agreements spells out the basic promise of the insurance company. Condition spells out the details and duties of rights both parties. Exclusion contains circumstances where the insurer will not pay. D dice. Insurable interest, property and casualty at the inception and the time of the claim. Life at the inception need not at the time of the claim. Homeowners policy exclusions. Earthquake, flood, neglect, intentional loss, ordinance or law, power failure, war, nuclear hazard, sinkhole is a covered peril for the exam. Replacement cost coverage. Replacement cost times coinsurance percentage equals insurance required. Insurance carried over insurance required times loss minus deductible equals the amount paid by the insurance. There's that. Automobile risk exposures. Requirements for a vehicle to be eligible for insurance services, ISO, personal auto policy, PAP. Be owned by an individual or by a husband and wife living in the same household. Be a private passenger automobile. Not to be used as public or livery conveyance. Not be rented to others. Auto insurance policy parts. Part A, limited to third parties. Part B, medical payments. Part C, uninsured / underinsured and motorists. Part D, damage to the covered auto. Covered auto as used under the policy. Any vehicle shown on the declarations page. Any of the following vehicles which you acquired during the policy period. Private passenger auto, pickup truck, panel truck, or van. No coverage for pickup, panel truck, or van used in a business. Need commercial policy for that. Any trailer you own listed on the declarations page. Any auto or trailer you do not own while used as temporary substitute for any vehicle described in this definition which is out of normal use because of a breakdown, repair, or servicing, loss, or destruction. Persons insured under medical payments coverage of the PAP, personal auto policy. The name insured and any family member who suffers bodily injury caused by the event while occupying the covered auto. The named insured and the family members who, if the pedestrian are struck by any motor vehicle designed for use on public roads or by a trailer. Other persons while occupant is insured's auto passengers. Uninsured motorist coverage. This agreement promises to pay the amount insured of an injured insured could have collected from the uninsured driver, if such driver had carried auto liability insurance. The term covered person as used under the uninsured motorist coverage of personal auto policy includes the named insured and any family member, any other person occupying the insured's covered auto, any person for damages that person is entitled to recover because of injury to a person described above. Special note: is liability protection, not medical payments. Perils covered under the other than collision provision of the auto policy: breakage of glass, loss caused by falling objects, fire, theft, explosion, earthquake, windstorm, hail, water, flood, riot, or civil commotion, and contact with birds or animals. Umbrella liability insurance. Nearly always a correct answer, since it is smart coverage. Provides liability coverage, BIPD, for catastrophic legal claims. Requires policy owners to carry certain underlying coverage of specific minimum amounts. Professional acts are specifically excluded. This is nearly always a correct answer since it is smart coverage. That's an umbrella liability insurance. Oh. Professional liability, malpractice, bodily injury, doctors and dentists, errors and omissions, monetary damages, financial advisors, lawyers, accountants, insurance agents, etc. Workers' comp, unlimited medical expenses, disability income, tax free, death benefits, rehab, absolute liability. Medicare does not cover routine foot care, glasses, hearing aids, and dental work. Emergency care outside the U.S. Some exemptions for Canada, Mexico, and Caribbean. Medicare long-term care. Benefits are limited. Pays all the first 20 days of skilled care and everything over a specific amount per day for the next 80 days of skilled care, maximum 100 days. This limited benefit is subject to substantial restrictions, pays for skilled care only. Admissions to a nursing home must follow within 30 days of hospital stay of 3 days or more. The patient's conditions must be expected to improve. HMO versus PPO. HMO. Provider paid monthly fees regardless of services rendered. Capitation. Out of network care not covered at all. PPO. Provider paid for actual services rendered. Out of network partially covered, usually 70%. COBRA coverage requirements. Must have 20 full-time, part-time employees. Coverage must be offered to terminated employees' dependents, continuation period up to 18 months. Qualifying event would be voluntary or involuntary termination, change from full-time to part-time. Spouses and other dependents, continuation period up to 36 months. Qualifying event for that would be employee's death, divorce, legal separation, or eligibility for Medicare. Children of employees, continuation period up to 36 months. Qualifying event, loss of dependent status, marriage, reaching dependency age limit specified by plan. Health Savings Account, HSA, used in conjunction with the High Deductible Health Plan, HDHP. Distributions tax-free if used for health care. Contributions not spent are carried forward in the owner's name and are portable. Unused assets become property of named beneficiary upon death. Distributions for non-medical are ordinary income plus 20% penalty if under 65 income tax penalty. Definitions of disability. OWN-OCC, best definition for insured. Modified ENEOC, split definition, own then modified.
Antioch Social Security definition. Loss of income. That's definitions of disability. Disability income policy continuation provisions. Continuance. Non-cancelable. Non-can continuous term policy guaranteeing that insured right to maintain policy at stated premium. Guaranteed renewable. Continuous right to maintain the policy, but the insurer may increase the premiums by class of insureds. Taxation of disability policies. Taxation of premiums and benefits. The individual owns the contract and pays the premium. Premiums are not deductible. Benefits are tax-free to the employee. The employee owns the contract and the employer pays the entire premium under a bonus arrangement like a Section 162 disability insurance. Premiums are deductible by the employer as a bonus. Benefits are tax-free to the employee. The employee owns the contract and the employer pays the entire premium under a salary continuation plan, group plan. Premiums are deductible by the employer. Benefits are taxable to the employee. Permanent life insurance, low risk tolerance. Insurance company controls investment return, assets part of general account, whole life and universal life. High risk permanent life insurance. That's going to be variable life and variable universal life. Client controls the investment return and assets are part of a separate account. Dividend options. Cash, reduced premium, accumulate with interest, paid up additions, or 1 year term. Fifth dividend. That's crapo. Non-forfeiture options. Cash, extended term, paid up, reduced amount. Settlement options. Cash, pure life, single life. Refund. Period certain. Specified income period. Interest only. Modified endowment contract. A MEC. Entered into after June 21st, 1988. Fails to meet the 7-pay test. For exam includes all single premium policies. Distributions, withdrawals are taxed LIFO. Interest first. Distributions under 59.5 are also subject to 10% federal penalty tax if not disabled. Death benefit is tax-free. MEC grandfather life insurance rules. If the death benefit increases by $150K or less and the insured has guaranteed insurability, no proof of insurability, the policy will not lose its grandfathered non-MEC status. If the policy increases by any amount that and the insured must prove insurability, the policy may lose its grandfathered non-MEC status. Proceeds taxable to transfer for value. If an interest in a life insurance policy is transferred for value consideration, not a gift, the proceeds in the excess of the consideration paid for the policy, combined with any premiums paid by the owner, are taxable as ordinary income, like a viatical. The 3 main exceptions to this rule are as follows: a sale or transfer to the insured, a sale or transfer to a partner or partnership in which the insured is a partner, a corporation is in which the insured is a shareholder or officer, or divorce. These are proceeds taxable due to transfer for value. 1035 tax-free exchange rules. Life to life, okay. Life to annuity, okay. Annuity to annuity, okay. Annuity to life, no, no, no. Lindsay Lohan went to LA for AA, not Alabama. Buy, sell, stock redemption versus cross purchase. Stock redemption, no step up in cost basis. Entity is owner and beneficiary. Cross purchase, step up in basis. Individual owner is owner and beneficiary. Split dollar insurance, endorsement method versus collateral assignment method. Endorsement method, employer is the owner, employee is not a shareholder. Collateral assignment method, employee is an owner, employee is a shareholder, employee assigns the policy. Annuity taxation, periodic payouts, basis over payout equals tax free. Lump sum payouts, LIFO, interest first rule, ordinary income plus 10% penalty under 59 and a half. Flexible spending account, FSA, must be used by March 15th or forfeited to company. Use it or lose it. Medical only. Dependent care must be used by 12/31. Not subject to income tax, FICA, or FUTA. Health FSA may not be used to reimburse an employee premiums paid to other health plans, such as MSA, HSA, or LTC. Expenses for long-term care services cannot be reimbursed under a health FSA, but other medical expenses can be reimbursed. Fringe benefits, tax-free, major ones. Healthcare premiums. Insurance premiums on non-discriminatory life, group life policy up to $50,000. Company car for working conditions only. Employer provided transit passes, $350 per month cap, or parking, $315 a month cap. Occasional overtime meal, cab fare, theater or sporting event tickets. Discount on services limited to 20% of selling price charged customers. Fringe benefits, that's tax-free. Tax-free fringe benefits. Fringe benefits that are taxable. Health insurance premiums paid for self-employed partners and more than 2% owners of S Corp are taxable income. 100% is deductible as an adjustment to income on the front of the 1040. This can include all types of health insurance programs. That's fringe benefits that are taxable. And that is the insurance planning. So I'm going to stop that right here, and then I'm going to do investments.